Powell at the Fed is gone in 30 days drama.
Everyone's just so dramatic now. Everyone's overgrown children. Bro, I gotta stop fucking thinking the S&P ripped. What is that? 500 points basically?
It's like a game of musical chairs, right? That'll happen until the music stops.
Yeah. Strategy has purchased more Bitcoin than what was mined over the past 12 months. Like they outpaced how much Bitcoin was mined.
Someone basically like vibe coded a fake ledger app and it's stealing people's crypto because then they download it and they connect to it and then you lose all your money. We are live. Welcome back, everybody. I feel like a lot's happening in the markets. I told Mitch, let's see if we can focus more on the markets for this podcast. Keep it a little more general, just with everything kind of happening in the world. And I wasn't even paying attention to this, but Mitch said Powell at the Fed is gone in 30 days. So that's pretty positive news for the markets. Trump yesterday just signed some stimulus bill. I didn't really have time to
I didn't know that
yet. Yeah, I guess there's some let's see, Trump stimulus. Let's see if we can get the information live. Bill. What is this? Tariff dividend proposal. I don't know. He signed some bill yesterday. Bitcoin went up. Everyone got happy. Along with that, I guess things in Iran are coming to a head. Maybe they sunk a bunch of ships. I think Trump said they sunk over 100 Iranian ships in the Strait of Hormuz. So,
I mean, I don't know. That just sounds like more war. I don't know about coming to an end.
True. Yeah,
coming to an end is either completely decimate and get an enemy to wave the white flag, or come to terms and get a peace agreement, which looks like it's 0 for 1 because there was the 2-week thing and didn't last very long.
Yeah.
It was like 2 days in and everyone was accusing each other of not listening to it. And I was like, everything's like a high school cafeteria. I'm like,
that's really true.
Pathetic. Everyone's just high schoolers.
Yeah.
But there was, when that agreement happened though, it was nice because I know bond yields like at least dipped for a day or two, which I jumped on that opportunity in regards to real estate because I was trying to do my refi and the rates had popped up half a point, over the month of March. Like that was crazy. Yields zoomed higher because of the war. So yeah, it's interesting to say how it's going to play out, but it definitely impacts the economy.
Yeah, for sure.
I feel like more than it should. Like I get the oil piece, and then obviously that hurts in terms of cost and inflation, but like U.S. government yields, like government bonds, like what does that have anything to do with us battling Iran and where oil is really the only thing? I mean, I don't know. I guess there's 6 degrees of separation somewhere that I'm not mathing, but
just seems so mixed in terms of every day. I feel like you get the opposite news of the previous day. So you get something super positive, and then the next day it's something super negative, and then the next day it's something super positive.
You're not wrong. I mean, I don't even know. I feel like there was nothing positive the past day, and market. I don't even know why the market ended up ripping at the end of the day yesterday. I guess maybe it was on that news you were talking about.
Yeah, I'm curious to hear. Well, let me switch this.
Swappy.
What's your take on Coin right now?
Oh man, switching gears.
Switching gears to it's kind of switching gears. I guess we've got the political news and how it affects markets, and then Bitcoin's been ripping. So
the Fed talk was pretty much, really the headline was Powell's term is over in a month, and the guy that's picked hasn't been confirmed yet, and we'll see, what battle happens with that because one of the people that have to confirm him are saying he's not gonna until like the lawsuit that the government or whatever, is going after Powell for is dropped. And it is definitely a lot of just
drama.
Yeah. It's like, everyone's just so dramatic now. Everyone's overgrown children. So obviously people have been looking forward to the regime change because allegedly that's going to mean lower rates, but there's no guarantee. Just because like someone that is, Trump's guy, so to speak, comes in doesn't mean like rates are going to automatically get cut. So I think, currently rates will be impacted by the war. Once that ends, rates will go down. Bitcoin going up. I don't even know why it's going up, to be honest with you. Like, it was down Sunday. It looked like it was going to stay in the range, and now it's popped up. And I guess, markets are up as well. So that helps. I don't understand why the stock market's up either. I mean, that's insane. The stock market did what it know. I got to stop.
All-time highs.
Bro, I got to stop fucking thinking. And now I'm ruining the recording with my cuss words. Over the last 5, 6, 7, I don't even know years now, at least more. Yeah, literally over the last 8 years. I'm looking at the chart right now on the S&P. Anytime, like, it's just like we go higher forever, then we get a violent dip, and then we just U-turn rally. Like, there's no double down move. Like there always used to be a second leg down. It just apparently doesn't happen. And last time we got a big dip was in April of 25. And if you just blindly bought it, you crushed it. And then same thing, like this literally just happened. We crashed. S&P went under the 200-day, came up, tested it, failed. Right. Which it wasn't really like it all happened in like a 2-day span. So it wasn't like it was like a lower like bottom really. And then we went down, another, what is that? 300 points. And then, since then rallied. And yeah, I mean, from the last day of March, the last day of March was when we got the first big green candle, and then we've just ripped. I mean, the S&P ripped. What is that? 500 points basically.
Yeah.
While there's a war going on and everyone's complaining about, oh, we're getting killed at oil prices. And I'm like, I guess because it's driven by software and AI. But yeah, I was thinking about this earlier today. I don't understand the stock market anymore. Like, it doesn't make any sense. We just keep going higher. I don't know how. Valuations make no sense. I don't know where this money's coming from that keeps going into the market. Like, it's baffling to me.
Yeah. I mean, I feel like, in my opinion, it's just all like inflation, right? Like, it's just, there's so much leftover stimulus that's been floated around that while people are, it doesn't feel like people have a lot of extra money to throw at the market, but it does feel like the market just keeps ripping higher and assets just keep going higher, because I just don't think that the stimulus effects are really done yet. Like, I think everything's just being repriced higher, and it hasn't settled down. Because like this S&P chart, I mean, like, look at the S&P. It's just like literally nothing but up. And
stupid.
Yeah, I mean, it's like you said though, like anytime you get any downturn, it immediately gets bought right back up. And why is that happening? I think the smart money knows that the stimulus and the inflation is not gone. So it didn't just disappear. It needs to get absorbed over time. And so anytime there's any dip, they're like, yeah, I'm buying this dip because it's just clearly going to go right back up. That being said, that happens until it's like a game of musical chairs, right? That'll happen until the music stops.
Yeah.
Once the music stops, then everything turns around.
It's happening way longer than anyone would have expected.
Yeah. And it could keep happening because
I
think it's just so unprecedented. I mean, the amount of capital and what's been happening in the world. Everyone thought we were in the AI bubble. Turns out the AI bubble isn't real. Like, it's just going to keep growing, and potentially, that bubble will never pop. I can see both sides. Like, I see a lot of people saying there's an AI bubble. I see a lot of people saying that the value of AI is hard to put a number on, and it's just going to keep growing right now, kind of like the internet did. And I can see both sides of that. I can see that, some things feel kind of bubbly. Other things feel like we're still so early to this revolutionary technology. And that is obviously bleeding over into every different corner of the market. It's really hard to tell where we go from here. I mean, in terms of Bitcoin, Bitcoin is just I feel like Bitcoin is in like a weird middle position where, like, I don't see it going lower than 50K, but that's still that's a $25,000 drop from where we are now.
Yeah. I mean, when we got to 60, it wasn't so far away. And I was really looking at like, granted, whatever, anything can happen, but I was looking at, all right, if we crack 60, we'll probably see like 53, maybe 50. There's a lot of support, a lot of reversals that, at those two price points, and then after that, obviously, you get into the 40s. But at that time, it was, that's from 60. It was just a couple red candles and we're there. Now, it'd be a nice pullback. Who knows? I mean, 60 was it. Which, if you think about it, I mean, that's more than a 50% pullback from all-time highs. So it easily could be.
Yeah.
Especially because, like, everyone talks about, like, oh, with institutional money, they usually, more mature market, less volatility. So it's like, all right, we used to have, what, 80+% pullbacks, you know what I mean? So it's like, all right, well, is 50 the new norm, right? Or is that just what it is this one? And I don't know. And it depends on how you draw, like, trend lines and stuff. Like, I have a very long-term trend line on Bitcoin that, right now, that trend line is in the like low 60s. So it's like we kind of got near it.
And,
but
and on your point about the moves being a little bit more muted, I think like institutional buyers are still there, and kind of similar to the stock market. Like when there's a big dip, they're there to buy it. They weren't in previous markets. The institutional buyers weren't there, right? So like, Bitcoin would dip and it's all up to retail to buy that dip up, and retail's very emotional. And the bear markets were more prolonged because, when people are feeling like shit, it's just going to people are going to keep feeling like that until something major turns it around. Whereas institutional buyers are less emotional. It's like Michael Saylor, for example, which is why I pulled this up. They just bought $1 billion worth of Bitcoin. And it's the dip happens and they're not emotional about it. They're like, okay, dip happened, let's buy more. And
he's actually bought I saw this one crypto group I'm in, they were talking about that. Like, they're like, is anyone getting worried about Michael Saylor? Because they showed over the past 12 months, Strategy has purchased more Bitcoin than what was mined over the past 12 months. Like, they outpaced how much Bitcoin was mined, which is crazy too. Because think about that. You had just one buyer outpaced new supply, and price was still going down. So it's like, well, how many sellers were out there? Geez.
Yeah.
But at the same time, think about that. That's a lot of Bitcoin that just went into diamond hands.
Well, there's to steelman the other side of that. There's a lot of people who say that Michael Saylor's not buying real Bitcoin, and that's why he's able to buy so much, is because he's buying, like order book Bitcoin from centralized exchanges. So because he's not buying on-chain Bitcoin, he's able to find the buyers. He's able to find coins because they're not real coins; they're paper coins. That's
but hold on, hold on. I would get, like, if you're talking, like wrapped Bitcoin, that's not real coin or whatever. But like, how does that work with centralized exchanges? Like, don't they have to hold like the actual liquidity or no?
It depends. I think it depends on the exchange. Yeah, it depends on the exchange. I think there's plenty of exchanges that don't do that. I would say maybe like Coinbase would probably be on the side of doing that.
Yeah, Coinbase, yes, because they're basically regulated, acting as a custodian for like Morgan Stanley and companies like that. Yeah. But yeah, it's probably like fractional reserve. Like if you go on, let's just say whatever, exchange.
Well, that's what happened with FTX, right? Like everyone was buying crypto on FTX, and then when everyone went to withdraw their Bitcoin, ETH, USDT, etc., they didn't have it. What they had was FTX backing that crypto.
Yeah, but I got it. But like, I don't think, I mean, maybe I'm wrong, but unless he's having these centralized exchanges essentially act as a custodian, and because if he's moving the Bitcoin to like Strategy's wallets, which I don't know if that's the case, then
I think they custody it on Coinbase custody.
All right, so yeah, and you know what? Listen, even Coinbase could be the most legit exchange out of all of them, and it probably is definitely top 3, but they most likely are not 100%. Like they get, like, there's no way they're not doing fractional.
I think centralized exchanges do whatever it takes to make some money.
Yeah, like it's probably like, and they might have a conservative approach, but there's no way like I'm going to believe that they're 1-to-1 on Bitcoin, like, especially they don't need to be.
No, I mean, it's really just if people come to withdraw, they need to be ready for that.
It's always what it is, right? It's like the oh my God, what do they call it with the banks? Like when there's a bank run, they just have to worry about
the bank run. Yeah, exactly. Same idea. So I guess Strategy uses Coinbase, BitGo, Zappo, and recently they've also been using Fidelity custody. So I guess they're using multiple custodians.
All right, so they got two more big legits and 2 others that are like surprisingly like, why are you guys using them?
Yeah.
Interesting.
Yeah, I mean, there must be some strategy to that, obviously. I mean, they're not stupid. They've got almost 1 million Bitcoin. I mean, the question is like, how much can this go on? I guess is like, it can't go on forever. But also, now that they've got so much Bitcoin, as the price goes up, their ability to buy more Bitcoin is just going to keep happening, right? Because it's like, all right, let's say the Bitcoin price doubles. That just doubles the value of their treasury, which technically doubles their buying power, because that's how he's designed it. I don't know. It's probably one of the most fascinating cases of financial engineering that's ever been done. I mean, I personally, I think it's awesome. I think I'm a big fan of the financialization of everything. So I would love to hear that this 780,000 Bitcoin is a legit 780,000 Bitcoin that's sitting in custodied wallets and it can be verified. It obviously they're not verifying it publicly, but at least if it's being verified within, internally, I think that's really net positive for the industry. But just to wrap it up, I mean, like, the institutional buyers are not going anywhere. They're just getting a taste for Bitcoin, and Michael Saylor is just one of them. Now you've also got BlackRock, you've got JP Morgan talking about it. It's just going to keep getting more and more institutionalized, which you have to take that for what it is. I mean, it's going to grow the industry, but a lot of people will say it's growing the industry in a direction they didn't want. But at the end of the day, I mean, it was inevitable, right? Like, you're never going to have people wanted a global asset, that's worth trillions of dollars and used worldwide in all sorts of different use cases. And that was never going to happen without institutional adoption. This inevitability is just taking place before our eyes. And I do think it's leading to like less volatility overall. So I actually think we maybe have seen the bottom. I think I would put some money on saying that we've seen the bottom. I'm very open to the fact that I could be completely wrong about that, but I do think we've seen the bottom. Excuse me. Another interesting piece of news is that we are officially, as of today, halfway to the next Bitcoin halving.
Wow.
So I know you mentioned that Michael Saylor has been buying more Bitcoin than the incoming supply. So that obviously kind of relates to this story I had pulled up, where the incoming supply is about to get cut in half, or about to, as in 2 years from now. But I guess at this stage of the halvening, people start to kind of talk about the halvening. The talk of the halvening is really the halvening itself, right? Like, we've talked about this. I actually think we talked about this years ago on the podcast. Maybe when this was called the Leo Roundtable. I think we talked about this plenty. But the effect of the halvening is really that everyone anticipates a lower incoming supply, especially nowadays where the halvenings are. I think we're going from like 3.1 Bitcoin per block to like 1.6 or something like that. So what's your take on this? Do you think the halvening, probably the biggest question that people are going to ask about this is, do you think the halvening actually matters anymore?
I don't know. I don't even know if it mattered the last time. It didn't really do. I don't think it did what people expected. I think it has an impact, sure, because I mean, you're just, anytime you reduce the flow of supply, right, that's going to have an impact. So now it's just like, every block is less Bitcoin that can be mined. That has an inflationary pressure, so to speak, in terms of like supply and demand, because it's just like, the supply is going to get, the new supply is going to get cut in half. And it's like, well, the demand's not going to get cut in half.
Right.
So like, should still have that net positive effect. I mean, that's one of the biggest long-term, arguments about Bitcoin, is just that fact right there. The supply continually shrinks. So that's very good for the supply demand dynamic, which is what everything comes down to. Now, that gets muddied with Bitcoin and crypto in general, because all the synthetic products, and like you said, even with Michael Saylor potentially not buying real Bitcoin, so to speak. So that's also changed, because like, I don't think, the demand has continued to increase over the years. The difference is, though, like, now you have all these synthetic Bitcoin products. So money's going to those instead of going directly into Bitcoin, where, 8 years ago, it was just going to Bitcoin. I don't even know when wrapped Bitcoin started, but it was definitely sometime within the last decade. So those early years, it was Bitcoin. You bought Bitcoin, that's all you bought. So that also is impacting the demand side. But it's good that supply side continues to shrink. That's always a net positive.
Right.
It's the opposite of, it's the opposite of the US dollar, where they just print more and more and more.
Very true.
So,
yeah, I think the halving is having less and less of an impact, but like you said, I mean, it's still there. It has some level of impact. But yeah, I mean, as we see more derivatives, obviously it's going to be the actual supply and demand dynamics are slightly different. So you can't discount the fact that with all these different derivatives, like someone that may have in the past gone out and bought a Bitcoin and put it on a hardware wallet or something and held it in cold storage, nowadays they may go in their IRA or something and buy IBIT, and whether or not you actually believe that IBIT and BlackRock goes out and buys one Bitcoin in direct correlation and then puts it in a wallet, that's a whole other conversation, right? And then you've got leverage derivatives and all sorts of other things, which leverage has like the perpetuation of everything, like with all the futures and the perpetual futures on crypto. All these derivatives have created all different marketplaces for these assets, which, depending on how you look at it, I mean, I tend to think it's generally a positive thing because you're seeing more velocity of crypto moving around. So I generally tend to think that that's a good thing. It's a positive for the industry, but it could be seen in both ways. So my take is that the halving has less of an impact than it used to, not just because it's less coins that halving each time obviously is less in terms of a coin impact, but also just because of all the different derivatives and everything else. I just think it has less of a direct correlation to what Bitcoin is going to do than it used to. But I still think people tend to think in cycles, and retail thinks in cycles, but I think institutions play those cycles. So, I think retail drives the cycle, but then institutions are the ones like leveraging it. So I don't think that that's going anywhere. I know you got to get off soon. So final news story that I wanted to cover is the fake ledger app. So
interesting. Haven't heard about this.
Yeah. So I made a YouTube short about it the other day, if anyone wants to go watch that. But there's this fake ledger app that's been, circulating on the App Store. I guess some people are saying that it may have been like about $10 million worth of crypto that's been stolen. I think it's kind of hard to tell exactly how much has been stolen. Obviously, it's not like you get one wallet, you can track everything. So
yeah,
been pretty hard to track. But someone basically like vibe coded a fake ledger app, and it's stealing people's crypto because then they download it and they connect to it, and then you lose all your money.
Oh
so
my God.
What I think is interesting about this story is, obviously I feel bad for anyone that gets hit with this. I know that I don't know if this is going to show it. I don't think this shows it, but I saw like the App Store listing of the ledger app, and it's like totally obvious that it's a fake if you're in the industry. But sometimes people do stuff fast. Sometimes, I don't even know, like someone may die in your family and then you download Ledger and then try to connect their Ledger to it. Like, I mean, a million different scenarios could happen. But I think what I find, interesting that we're, as a world that we're going to have to follow is that vibe coded apps and AI hacks of all sorts of sophisticated levels. This is only just beginning, and this is only going to get more and more sophisticated as AI gets better. You may even have AI agents that maliciously are created to do stuff like this, where they create fake apps and they try to, essentially do one of the oldest scams in crypto, which is like a phishing scam. But there's going to be all sorts of different scams that happen. And I think it's now more than ever, it is important to like solidify what you use, how you use it, how you protect your crypto. I know that with Leodex, like we build stuff really directly in this space where my goal is, security overall and ensuring that people are doing things that are, in their best interest and using secure protocols and, not getting stuck on centralized exchanges, which actually was another topic I was going to cover, but I'll cover that some other time, is that MEXC has been cracking down on people with no KYC. So you're having centralized exchanges cracking down on people. You're having fake AI vibe coded apps coming out and draining people's crypto. So this is not just a crypto specific issue, but obviously with crypto, you've got this, financialization of things. So it makes it obviously a more ripe target for malicious activity. But, with AI going the direction it's going, I just think you need to be extremely vigilant when it comes to the apps you use, when it comes to finding, good decentralized exchanges to use, because centralized exchanges have really cracked down on people, and that doesn't seem to be going anywhere. So So yeah, with all of this stuff happening, I just think it's important as a public service announcement reminder to be very vigilant about this stuff and check all your apps and check the URLs when you're on things and make sure you're using trusted products. Something that I try to like bake into LeoDex is one of the reasons I think LeoDex is worth trusting is because we're public facing, right? Like you've got me out here every week doing these podcasts, and then I'm on X and all the other places every single day. So I think one of the benefits of LeoDex is that you get like an actual face behind it, right? Whereas with a lot of other apps out there, you don't get that like direct founder, interaction. You don't get the face to it. You don't get the responsibility and kind of like the credibility, so to speak, of having that. So that's something I try to like really bake into what the team does in terms of LeoDex is when we're talking to people, when we're trying to get people to use it, we're saying, look, like, a lot of people are using other apps that have like faceless founders and teams that, you don't even have their real names. Whereas with LeoDex, like we're really trying to be different about it and trying to go about it with a different approach, especially in a world of AI and vibe coding. And, people are launching apps for every single thing these days. The whether they're malicious or not, there's a lot of risk to that. And I'm a big fan of vibe coding. I'm a big fan of people launching things and building things. But I do think there's some value to having like a face to the app. And I try to bake that into LeoDex. So my public service announcement is secure yourself, know what you're using, know the team that's building the things that you're using. And with LeoDex, we try to make that a priority.
Speaking of LeoDex, is there any Leo-based updates as a send-off, or everything's just chugging along?
There's been actually like a really solid amount of updates. And I've been posting about them on X very regularly. So keep up with the tabs on X and other places.
Nice.
I'll showcase a few things here. So last week I showed you probably the biggest new thing is the whale discount. So we talked about that pretty extensively. Yep. You get like 67% off on fees if you do large swaps. So that's been a big deal. We've been coming out with some new stuff related to, I'm on the beta site right now, if you're wondering, but we've been coming out with some new stuff related to SEO. So doing like search engine optimization for the LeoDex site, working on getting it listed and seen in more places. Really what we're working on now is I think the technology is in a really good place, but the key for us now is distribution. So lately, a lot of the stuff we're doing is distribution focused. One of the new UI updates is this new Connect Wallet screen. So you can see this is on beta, still kind of a work in progress. But when you click Connect Wallet on the current LeoDex, it pulls up like this huge big pop-up in the middle. We've redesigned this to be like a smaller menu that detects the wallets that you have. So it's just less like, my goal right now, actually this is my goal for today, is how can we reduce the number of clicks from when a new user comes to LeoDex to when they swap? So I'm trying to reduce that number of clicks to less than 3 to 5, depending on obviously on like what wallet they're using, all sorts of other, if they're using what assets they're swapping, what protocols they're swapping, et cetera. But if I can get the average swap to take less than 5 clicks, that's my goal today, is to reduce that friction. So one of those ideas was to make the Connect Wallet screen better. So you can see here, it just reduces the friction and reduces the mental load of, when you get to LeoDex, what wallet are you connecting? So you see, on this browser, you can't really see it on the shared screen, but on this browser, I have MetaMask and Kepler installed on this browser. Excuse me. So it shows me MetaMask and Kepler, right? Like I just quickly click those. And then I can click more options. And then this shows me like all the wallet options on LeoDex. So I can obviously just go through any of these. But if I, again, friction, right? So if I can reduce the friction for a user to be, well, you just click this and it shows you your top wallets here, but then you're like, oh, well, I wanted a different wallet. Click more options and you get it. So that's an update that'll probably roll out today. What else have we added? We added this brand kit. So again, a lot of like distribution level updates. So one of the distribution updates is putting out this brand kit. A lot of different apps and protocols have asked us for logos and things like that. So now if you as a user or if you as a protocol, if you're representing a protocol, if you need anything related to LeoDex, you can literally just go to the brand kit page. It's got all the fonts. It's got all the different logos. So really easy to get all that stuff. this is a new, not this page. So in terms of like optimizing for traffic and distribution, we've added, I think, like 2,000 unique URLs to LeoDex, something like that, like over 2,000. Each URL is designed for both AI and search engine crawlers in order to find all sorts of unique cross-chain related things. So for example, if you go to this new page, this is on the beta site again, these should be live probably like today or tomorrow, but there's this new page where it shows all the different assets, or a lot of the different assets that are supported on LeoDex. So basically, like, creating really rich crosslinks is the goal here on the site, so that when people search something like coin cross-chain trading or something like that, like keywords, they're finding different LeoDex pages. So this is the new asset page, and then it kind of takes them to each individual asset. And then we've also got this new page. Again, there's like 2,000. So I'm not gonna show them all here, but I'll just show like the headliners. Here's the new security page. So this is like a huge question, right? Like, is LeoDex secure? Is LeoDex safe? Actually, kind of related to the Ledger news story. You know, when you use something, a lot of time, at least for me, when I use something new, I'll Google, is XYZ legit? Like, for example, let's just say I'm a new LeoDex user. I come to LeoDex and I say, you know, is LeoDex legit? And then I might Google that. I might just say, is LeoDex legit? And then Google will return all sorts of different results for me, whether it's through their AI or whether it's through, you know, search engine crawled pages. So we built this page, which is leodex.io/security, which again should be live in the next day or two. But it basically shows you all this like rich text information about whether, you know, LeoDex is secure and legit and safe. This is all like frequently asked questions. Is LeoDex legit? Like I just mentioned. So these are questions that people might type into Google, for example, and we want to get them onto LeoDex, and we want to get them the information they're looking for. So shows you LeoDex versus centralized exchanges. It tells you about the fees LeoDex charges. It tells you about the protocols, and it actually links to the audits and the security documentation for each protocol. So I think this is pretty cool. You can see, like, you know, let's say someone searches, is Thorchain secure? They might get returned to this page where it has the audits and everything collected by LeoDex about the different protocols we support. So we've, like I said, we've added over 2,000 of these rich text pages. We're going to keep adding more as we kind of see good gaps that we can fill. And yeah, we'll just kind of keep heading in this direction. Here's another example. Will be the final one I show. So a lot of people say, like, how do I swap crypto with no KYC? Well, LeoDex is just an interface where you connect your wallet and you swap. So we added this no KYC swap page, which again is designed to find those people on search engines and AI engines and things like that. And when they search these common questions, like, which blockchains can I swap without KYC? You know, like, these questions will now come up and link to this page. So a lot of I would say the next foreseeable future, you're going to see all of our updates really focused on just, you know, how do we get more distribution for LeoDex and all the things that we're building. So that's a lot of cool stuff in this direction.
Yeah, no, and that's it's funny. That's because, you know, I look at that with just marketing with businesses and whatnot, and it's about making yourself easy to find for people that have the need. You know, they're already looking for that thing. So it's like making the easier you make yourself to find, then those people can find you, as opposed to, you know, when it comes to marketing where you're pitching to people, it's like, no, find the people that need what you have and make it easy for them to find you. So like, that's an example right there where, you know, people searching for the no KYC thing. So I love that. That's smart. Sweet. Good updates.
Yeah.
Well, you're on a roll, but I got to bounce. So feel free to keep sharing. I'm out.
All right. Thank you. Thanks everyone for coming, and we'll see you next week.